How rich will you be if you invested $1,000 in NIO stock today? Shocking results. How wealthy would you be if you put $1,000 in NIO stock today? Probably a millionaire. Ha, just kidding, but who knows? The newest coronavirus outbreak in China is hobbling the country's vehicle production and sales, posing new challenges for industry titans such as NIO. So, hey viewers, welcome back to Finance Insight. Today, we are back with an amazing video, and I am sure you will find this video undoubtedly informative. So, we are about to discuss why you should invest in NIO and how rich you'll be if you invest $1,000 in NIO stock today. Are you guys excited? So, without any further delay, we'll dive into the video. And remember, please hit that bell icon and subscribe to the channel to get every single update about the channel. Now, let's get back to our topic. At first, let's talk about what did China Passenger Car Association say? According to the China Passenger Car Association, the latest pandemic of the fatal virus will last through May, resulting in a 20 to 40% drop in production. Due to supply chain difficulties, areas where the virus has resurfaced are closing down. According to the CPCA, automobile sales dropped by more than 40% in the first 2 weeks of April. Although the newest virus outbreaks began in March, officials have been proactive in instituting rigorous control measures which have harmed the Chinese economy and rippled across supply networks. Worldwide, Shanghai has announced 0 new infections outside of its quarantine zones in 2 districts, but they also note that severe limitations will remain in place as case numbers climb. The consequences of China's response to the virus have forced NIO and other automakers to suspend production. NIO, in particular, has recently raised prices for a few of its car models and suspended production. The timing has been unfortunate because the company was looking to ramp up production naturally. The resulting negative sentiment surrounding NIO has weighed down its stock price in the past 30 days, where NIO stock has lost nearly 17% of its value. However, NIO's long-term argument is based on growing electric vehicle demand, and it has a massive cash reserve of $8.7 billion, allowing it plenty of wiggle room to overcome present issues. I'll admit that I'm bullish on NIO's global EV prospects, but the recent news from CEO WillYou that the company is in the research stage developing its own phone to compete with Apple has me more than a little concerned that we'll lose focus in some vanity project by the founder. The CEO appeared on a talk show at the end of March explaining why the company is exploring and developing its own phone. On the surface, it appears like people want a phone that works better with their cars, but the more I think about it, the more it reminds me of a brand expansion gone awry. Consider Samsonite luggage or Zippo perfume. All this talk of NIO developing a phone gets me wondering what is the craziest brand extension might be. Should NIO collaborate with Apple to figure things out? I've never driven in a NIO vehicle, and I assume most North Americans haven't either, so I have no idea whether this is a true worry. Lee appears to believe it is, according to reports from the CNEV Post, and we're going to explore more from the perspective of providing a better experience to our users. CNEV Post reported, as Lee points out, Apple's operating system is a closed environment, which means Apple controls both the software and the hardware for the iPhone. Google has an open ecosystem, its Android operating systems available to download for free by anyone onto any mobile phone, except for an iPhone, of course. So if Apple were so inclined, Lee could go to them and work with their engineers to figure out how to provide a better in-car user experience without developing a phone from the ground up. If Apple is not so inclined, and it's not just because it's creating the Apple Car, the Apple ecosystem is a powerful customer retention strategy. I know this to be the case because there are 2 Apple computers, 2 iPhones, 1 Apple TV set, 1 set of AirPods, and 1 iPad in my household, and they all work very nicely together. Step out to Android and Windows and things are a bit different. At least fear is that should Apple bring out its Apple Car in 2025, many NIO owners, he suggested 60% for the percentage, using iPhones could be persuaded to trade in their NIOs in exchange for the Apple Car and its ecosystem. I find it hard to believe that anyone in their right mind would allow a $1,000 product to dictate the type of electric vehicle they buy, but irrational decisions like this probably happen more than we know. So the NIO phone isn't as crazy as an idea as one might think, but Lee states that it is easy to produce a phone and a lot tougher to make a good one. However, if it means keeping most of its vehicle owners buying more NIO vehicles, why does Apple need its own car? When posed this issue in February 2021, tech reporter Jason Ayton concluded that in much the same manner that it entered the phone market before it knew much about building phones, it wants to do the same with vehicles. There are a few goods riper to be disrupted than the vehicle. Tesla has undoubtedly done so to some level, but the conditions are nearly perfect for someone to come in and define what comes next for the car. Ayton wrote, even Tesla represents an incremental change to the automobile in the way that Pong was an incremental change to the cell phone. It took the thing you knew and added to it or changed it in some way, but it wasn't a new thing the way iPhone was. Now consider that the Apple car will probably sell for 60 times the price of an iPhone, even with smaller margins. The dollars generated would be staggering, even if 1% of. In 2021, iPhone users purchased one. According to Verge, there are over 1 billion active iPhones worldwide. 1% of them is 10 million. Multiply that by $60,000, and we're talking about $600 billion in revenue. Even if you space those sales over 10 years, that's an impressive $60 billion, or 16% of its $378 billion in trailing 12-month revenues. Owners of NIO stock can rest easy after putting words to paper. I'm convinced it's not crazy to think about the future in this way. It's the threats you can't see that sink you, rather than the ones that you can. The survivors of the Titanic knew all about this, but I digress. At the end of March, I said that the initial delivery of NIO's newest vehicle, the ET7, would boost NIO stock. It hasn't worked out that way. My opinions regarding NIO stock haven't altered. It has a CEO who's as mad as a fox, and many wonderful-looking, technologically superior EVs. At some point, investors will have to start buying the NIO tail. In the meantime, NIO stock owners may relax. The company's most recent brand extension is not a blunder. According to Tip Ranks, hedge funds have actively boosted their positions in NIO. The latest 13F filing report of 203 hedge funds submitted to the Securities and Exchange Commission shows that hedge funds increased their holdings in NIO by 216K shares in the last quarter. In fact, hedge fund buying has increased every quarter since the beginning of last year. After the Chinese holidays, the company's experiencing a good recovery in delivery numbers, and the debut of the ET7 and ET5 sedans later this year might be a major motivator. According to 29 experts, NIO stock has a 12-month price projection of 32.98 cents per share, which is a 67% upside from present levels. Therefore, investors should keep a careful eye on NIO stock moving forward. Is NIO stock a buy now? Fundamentally, NIO's financial situation is improving after debt and liquidity concerns weighed on the stock. It has reduced losses while increasing sales and enhancing EV margins. New electric vehicles, entry into Europe, and battery improvements mean greater room for expansion. However, the EV battles are heating up. As the pandemic continues, NIO faces a chip supply shortage. Longer term, battery supplies may pose an even greater challenge to EV stocks as a whole. Fears of delisting in the United States and a recession in China have put the NIO stock on a long path to recovery. It is still a potential and rapidly growing EV stock. So, I think we're at the end of the video, and I hope you enjoyed the video, and if you did, then give it a thumbs up and smash that subscribe button. And please press the bell icon too, so you'll never miss any update. And if you have any questions or comments on your mind, let me know in the comment box, and also check out our channel where you'll find more really cool stuff.